cover the commodity crack-up today and the Federal Reserve. Let's look at the future of King Dollar and the investment strategy. That's what I'm trying to get at. The investment strategy. How do you trade on all this stuff? Let's bring back our distinguished guest, Lee Munson, Portfolio Asset Management, Joe B., Stifel Nicholas, Rich Ilshishin of Lind Waldock. Rich I. I'm really working hard on that, and you're terrific. So I'm going to start with you, Rich. Here's my theory. Feel free to slam it down. Obama moving to the center. Obama overhauling the tax rates and the tax codes for businesses and individuals. That's bullish. It's pro-growth. You don't have to own gold. Do you have more productive investments with your capital, especially if there's not going to be a QE3? Are you buying or selling gold?
I think you buy the dip. You can't discount the gains that we've had. This is a bull run for 10 years plus. This is a corrective pullback. I think you want to, throw some.
All right, I think we lost him. We'll bring in Joe Battipaglia with the same question. And, Joe, let me just say this. With this scenario developing that we talked about, now I think Joe B. is still with us, and there.
Yeah, I'm here.
All right, buddy. Now, look, if, in fact, we have better tax policy, better economic growth outlook for whatever reason, is it possible that this is a good time to get out of the commodity stocks, the material stocks, which have been such heavy hitters? Is it a rotation time, Joe?
Well, I think this is a time when you look at overall output and manufacturing and growth in economies, and you can make a case for the oil sector. You can make a case for basic materials. You can also make a case for gold, but on a different level, and that is to say that you still have these global imbalances as it relates to China. Certainly the Eurozone is not out of its problems, and gold might be a go-to place, along with the dollar, interestingly enough, for investors during this very difficult year in transition where the dollar, the economies will all be in transition, and this imbalance in trade will still be there. So you can still make the case for gold despite a pullback.
Lee Munson, would you make that case, or would you seek other sectors outside of gold, outside of the commodities, outside of the materials?
I mean, geez, all I want to say to Joe, it's like, you got me agreeing with you. Did you beat me today? But I would say, make the case. I'm making the case. I'm saying, yes, let's do it. I'm buying gold today. I'm buying oil today. And I think Joe's got a good case. The dollar and gold can rise because, again, Larry, you're rotating. So go look at the things that got smashed up. Everything is going to start to rise. And so you need to be patient and you need to rotate your stock. Right now, everybody has said it's pricing in the market. It's done, the commodity thing. You're talking about the future of King Dollar. Larry, I think it's going to be a few more weeks, maybe a few more months before the dollar is really ready to make its ascent. And so in the meantime, go buy some value.
To make a descent or an ascent?
To make an ascent up. I'm with you, but I think you're a little bit early to the game. Today's the time.
I'm not
trade
a timing
it. Trade
guy.
it for a little while.
I've never been a timing guy, and you may be right.
I get paid to make money for clients, and I got to make money this month, next month.
Go ahead,
last year was a very interesting year because the stock market turned into double-digit performance, but so did gold. And the bond market actually had a positive performance despite the jacking up of rates, and the high-yield sector was on fire. So it was a very interesting year for all financial assets. Now this year...
Yeah, but don't you think, Joe, that bonds are going to get killed this year and spreads, they're not going to just keep contracting here?
Well, I have a sense
that's a question
that,
for Joe.
Yeah, I think what you're going to see is that you'll get an inflation rate below 2, growth rate north of 2. The 10-year is going to trade in a range. It's still going to be fairly reasonable. And the Fed through June is clearly going to continue through with quantitative easing. And while that's happening, the Eurozone is going to go through its problems because we still have to deal with Portugal, Spain, and Italy. And while the market's anticipating that, my guess is that it keeps U.S. rates lower, keeps the dollar stronger, so we can have a very good situation here.
Lee,
I'm going to put my money where my mouth is, and I want to do those trades. I don't want to talk about it.
All right, Lee, let me just throw this at you, though. I'm making a slightly different case here, and that is you've got a Tea Party Congress, you've got a president moving now to the right, to the center, whatever. Yeah. It's more pro-growth on taxes. It's more pro-growth on lower spending. I think the Federal Reserve is acknowledging the easiest money is done. The easiest, they will finish QE2, but that's it. So I'm saying, why would investors and capitalists want to put their capital into gold? Why not put in more productive investments that will share as the economy rises and innovates. That's really the case I'm making. It may not be tomorrow, it may not be the next day, but in the next year or two or three, if these political and monetary trends pay out, I don't want to be in gold. I want to put my capital in more productive investment spots. And regarding the stock market, I might want to put my capital in the financials and the banks because they're going to finance the innovative new developments in the economy. What about that theory?
No, I like the theory. I think that when you're talking about, 2-3 years out, I'm not really certain that I'm going to want to be an owner of gold. I love banks. That's a big area that I've been, pounding the tables on for a year. And sometimes I look like a fool. But I think you have to remember, as the financials lead, and I think over the next year, I don't look at charts when I buy Bank of America. I'm buying, I admit, fundamentals. I do it sometimes.
Yeah.
But when you look at what you can buy now.
But practically speaking, on your point, Larry, unfortunately, you're going to see probably another $1 trillion deficit. They're not going to make draconian cuts in spending. It means the debt ceiling will take us north of 1 times GDP here in the U.S. Meanwhile, we still have this trade imbalance with the Chinese that has not gone away. It's still a pressure point. And you've got the fallout from Europe still to work through, which would make gold work. It also helps the dollar.
Right.
But that's the dynamic here.
If you live in China, do you want to have currency or you want to have gold?
Rich is back, and we're flat out of time. But, Rich, I'm going to give you the last whack. I've been pushing financial stocks and bank stocks to finance the next wave of innovation and entrepreneurship. Where are you on financial stocks?
Still got to diversify. I'm just going to go real quick back into the grain market for a second. This year, 2010 to 2011, China was normally a net exporter, an importer. There's your growth story, possibly 20%. I like food stuff and energy. Right. I think that you could play the stock market, but you have to diversify. I'm not all in gold, and I wouldn't suggest anybody being in gold. And you probably get your dollar pop, but I think you spread it around. Look for things that didn't have the 70% return and still commodities is going to be a big picture.
All right.
Supply and demand.
I got to leave it there, gentlemen. Lee Munson, Joe Badpaglia, and Rich Ilcision. Thank you very much.